Well, good morning, everyone. David Paul speaking, Managing Director of VectorVest here in the UK. And we've certainly got a relief rally underway, something I spoke about a couple of weeks ago when I was in Core Finance the last time. If we have a look at the front page of VectorVest, I'm taking a snip of one part of the front page of VectorVest, and it summarizes the trend position. It summarizes the trend position essentially in 3 words. And if you look down at the bottom right hand of the slide, you'll see that we have an up-down situation under trend. And that means, folks, that the short term, the first word's the short-term trend. The short-term trend is up. The underlying trend is still down. And the longest term measure of the trend on VectorVest, which is called a confirmed down, is down, and that's been down for the last 2.5 months now. So only the shortest term measure of the trend has been up, and it's moving up quite nicely. Those of you that are short-term 3 to 5 day spread bettors, that short-term measure of the trend now has been up for at least the last 5 sessions, for the last 5 weeks. Those of you that are following indices, for example, know that indices are well up, especially the Dow Jones over the last week. That was unsettled a little bit yesterday with all the results from big tech that I'm sure that you're more than aware of. So as we go into the trading day today on Friday, we are in a knockdown situation. There is the chart, folks. And that's our medium-term measure of the trend, which is my favorite measure of the trend. It's known on VectorVest as a DEW market timing system. And if you want to know exactly how it works, then I explain that every week at my Q&A sessions, which you get as a part of the VectorVest membership. So that signal is very, very near to a buy. I think that we'll probably pull back a little bit and then break. If we do, that would be great, because that would be what technicians refer to as an inverted head and shoulders reversal. So maybe expect a little bit of weakness today. And then if we break through that last old top, the top of the day before yesterday, then as they say, the ball would be in and the game would be on. What to buy? Well, I haven't bought anything in a very long time. As you can see, this was a nice period from in July and August. And since the middle of August, the trend here has been down and there's been nothing to do. In the VectorVest methodology, 70 to 80% of the exercise is being in sync with the overall market. Clearly, if you were shorting the market, was an awful lot to do here, but I'm speaking from a long-only perspective. So what should we have a look at? Well, the first stock that I'm going to have a look at when we do print a buy signal is for Imprint. It's had a good week. As you can see, earnings are growing strongly. That's the blue line study below the price. Price has responded, and then for the last little while, the last month or two, gone into that beautiful flag pattern, and it's doing its best to break out of that flag pattern. So if the general market gives a buy signal and for Imprint breaks the top line defining that flag pattern and moves on to a VectorVest buy, then for Imprint will be going in. The next one is Tongala. Now, Tongala has pulled back, as you see, it pulled back with a dividend. It's pulled back to where previous resistance is now sitting at support. It's got a bit of work to do for me. I would like to see it break up through the high of the last couple of weeks and move back onto a VectorVest buy signal. So that is work in progress, and it's undervalued, growing earnings strongly. I have a position in it already, and I want to add to that position when it moves back to a VectorVest buy signal. This is plus 500. Now, plus 500 fell through the floor some years ago on compliance issues. I was in the share. I hastily got out, I think, somewhere about as it broke down there. But it went sideways for a long while. It's broken up through a 52-week high, breaking up strongly. I think that the earnings per share is not quite as smooth as I would like it. Nevertheless, earnings is growing strongly and it's trending up on a buy recommendation, pays an exceptionally good dividend, and that would have quite a long target on the upside from here. So I'm positive about plus 500 as a growth stock. The Beasley Group I mentioned the last time I was on here is undervalued, and it's trending up very nicely, growing earnings strongly, and that looks as if it's poised for new highs, folks. So that's something I would certainly be looking at. This is a stock, Bloomsbury, that I've held right through the sell-off. And I bought into it. It was one of the stocks that I bought into just after the COVID sell-off. And it's had a very, very good week. As you can see, it's gone sideways when the market's been selling off during the course of this year. That's always a good sign. And those stocks that show strong relative strength in a market downturn tend to move the quickest when the market does turn. And you can see what Bloomsbury's done this week when the market has been strong. So I think that Bloomsbury, as a slugger, I don't think it's going to shoot the lights out, but as a slugger, that should do very well in any strong market between now and the end of the year. I think there's money to be made between now and the end of the year, folks. I think that we've got a relief rally. That relief rally could go considerably higher, but I'm playing it as a relief rally until it proves itself to the contrary. It's still time to be very careful. It's not a time for long fishing trips. So if you're interested in VectorVest, folks, you can take a 30-day trial at the website, vectorvest.co.uk. That 30-day trial is a $5, and you'll get access to all our webcasts and all our training. I look forward to it. Thank you.